All right. Hello, everyone. Welcome to your weekly market check-in with myself here, Greta Wall. I'm your host, and I'm joined by Derrick Oldensmith, the head trader at T3 Trading Group and the leader of T3 Live's Pro Desk virtual trading floor. Happy Monday, everyone. Happy Monday, Derrick. Before we get into any market-related discussions here, just a quick disclosure of Derrick's current positions as of our recording here on July 7th, 2025. Derrick, the title of our stream is focused on Tesla, but I think we'll get to that a little bit later as we do have some, more breaking news for the market happening currently, and that is on the tariff front. The Trump administration announcing 25% tariffs on Japanese and South Korean goods, which will go into effect as of August 1st, which is the delayed tariff deadline that the Trump administration said they were pushing it to. For other countries to make deals. What do you think about the market reaction to this news? What does it tell you about how the market is feeling about the trade picture overall?
Sure. So the market downticked on that news, 25% tariffs on Japan, 25% tariffs on South Korea, effective August 1st. But it's not a dramatic down move. The August 1st deadline just creates plenty of time to do what they've referred to as the taco on this. So we'll see if that happens or not. I don't know. Like news like this, it just doesn't matter until it matters. And right now it doesn't really matter because the systematic bid in this market is so strong that any down move is just an opportunity for the systematics to be able to buy the stock, the vol control funds, to be able to buy the stock that they need to be able to buy. And if you're not telling me that these tariffs aren't going into effect on July 9th or July 10th or whenever the original pause was supposed to end, it doesn't matter because there has just been such a consistent track record here of whatever gets said actually not being what happens. So whether that is 170% tariffs on China or the big spreadsheet that Trump came out with on the original Liberation Day, or Canada and Mexico, and that was first an ongoing saga of the tariffs we're going to put on Canada and Mexico that never actually happened. Unless Trump says these tariffs are beginning immediately as of today, it doesn't matter, to be totally honest. And these down moves are just going to be so supported by the systematic bid that even as we're having this conversation, we got a quick down move. We've already bounced back and retraced the majority of it. It's already turning into a non-event.
Mm-hmm. You and I have talked several times in the past about how the market reacts to news, whether it be good or bad, up on good news, down on bad news, etc. However much that move is tells you a lot about the overall sentiment of the market and direction of the market. What does today's reaction tell you about this market?
Tells me that it doesn't matter. The market doesn't care. And that's it. It doesn't matter. Whoa. That's it.
All right. Let's so our discussion, our title of the day is Tesla investors versus Musk. I want to talk to you about Tesla. I know you have been you've had very strong opinions about Tesla, the stock, in the past, and a lot, of course, happening with Tesla, with Musk's formation of a new political party, officially, filing that with the FEC. So it is like an official thing. And Tesla investors not happy today. The stock down over 7% over the weekend. I forget, is it Azaria? They were going to launch a fund linked to Tesla, and they decided not to because of Musk's and his distractions with politics and etc. So maybe we can pull up your chart and we can talk about Tesla stock. Does the chart even matter at this point with what's,
Sure.
Obviously not a technical based drop, more a Musk based drop. So let's go ahead and talk about Tesla. What do you think about Tesla?
Sure. Feel free to pull up the charts. I think I'm already sharing it on my end. I was short Tesla over the weekend. It gapped down pretty big this morning on that news. I liquidated the position for now, but I'm itching to get back into it on any sort of a bounce back. It's extended to the downside into some previous support that kind of starts at this 290 area. So I'm out of it for the time being, but this is a name that I want to short pretty much on any bounces. I mean, it's still an extraordinarily expensive stock. Let's start with that. Compare this on a multiple basis to NVIDIA. NVIDIA is the railroad tracks of AI. So if you're trying to make an argument to me that Tesla's not a car company, first of all, if you try to make the argument that Tesla's a car company, the thing belongs at $30. If you want to make an argument that it's not a car company and therefore it's justifying its valuation because of the future businesses that's going to get into AI, robotics, whatever, then it still shouldn't be trading at this much of a premium to NVIDIA because their business isn't even ongoing. The robo-taxis are barely ongoing. They've got a few rides going on in Austin. They've got a ton of competition. We see the competition headlines come out every day. We saw Saudi Arabia competition headlines out this morning where they're pioneering and moving forward more with this company, PONY, Pony. And there's no mention of Tesla there with Saudi Arabia and what can I type? Saudi Arabia and self-driving vehicles. And if anything, Saudi Arabia has a stake in Lucid. So I don't know why they would work with Tesla more than just giving them some, equal opportunity, perhaps. You turn things over to China. They have no advantage over in China. You've got other companies that have been already doing self-driving in China that are light years ahead of Tesla. The self-driving vehicles are more advanced at cheaper costs in China. I mean, the business to me, Tesla, it just doesn't make any sense. The biggest thing with Tesla was many people would make an argument that he is one of a few main reasons why Donald Trump is the president of the United States. So therefore, you can make the argument that Trump owes him one. And now we've seen that relationship completely implode. So you have the potential of him further slowing down any policies that could benefit EVs or even negatively impact his other businesses like SpaceX, the satellite business, turn to other competitors as those competitors are emerging. If anything, why is the stock trading at 292? I need someone to explain it to me because I don't fully understand, outside of the fact that it's just a meme stock. And we're in a market environment right now where you could point to one stock after the next that just doesn't trade in any realistic universe compared to its fundamentals. That's just the nature of the market right now. And a market can remain irrational for longer than you can remain solvent. There has been zero punishment to retail in any way for a very long time. They have been rewarded for chasing price, for buying high to sell higher, for buying stocks at obscene fundamental valuations for years. So until you see a market environment, and market environments change and evolve over time, I don't know when this will happen. It might be 10 years from now. But at some point, you'll get a market environment where fundamentals matter and the excess comes out of the market and retail actually gets hurt for buying some of this stuff. And it's in that environment that I think that the Teslas of the world can't maintain their price anymore. But again, does that start in a month? Does that start in 10 years? I have no idea. So we just have to trade the price action. The bottom line is with the price action, Tesla hasn't been trading well. And to me, that's what matters more than anything. I've been short Tesla for a while. If you want to pull the screen share back up real quick, I've been short Tesla for a while, but I got pushed out when this thing broke out on June 23rd, which ended up being now a false breakout. I stopped myself out when it broke through 333. I did not endure the pain from 333 up to almost 360. But then I remember on June 24th here, the day after the breakout, it was showing unusual relative weakness. I re-entered my short at 350. So I was able to get back in it just off of the relative weakness. And anyone that knows me well knows that I don't like trading day twos. This is a day two. I rarely do this. I don't like buying day twos because I feel like you missed the good opportunity. You should be long from 333. Why are you buying at 355 with a bad risk reward on the day two? It tends to be a bad risk reward and low probability of success if you're buying on a day two, even if you occasionally get rewarded for it. I don't like shorting day twos either because it tends to be too early. On a real momentum move, if you want to fade a real momentum move, real momentum breakout, you want to wait for at least the third day of the move. So you get day one, you get a big day two that sometimes pays the chasers, and then like a day 3 gap up is something that you want to short. I typically don't short day 2s or buy day 2s, but in that circumstance, I remember looking at it and it was so relatively weak. I was like, all right, I'm gonna reshort some, and maybe it turns into a false breakout. I'm not going to predict that it does, but maybe it does, and it did. It led to the stock getting back below the 330 to 333 major level. And it's one of the only maybe the only Mag 7 stock that's out there that has been trading with this degree of weakness. The only one that you could argue that it's been anywhere close has been Apple. And then Apple had positive news here on June 30th that changed kind of how this name has been trading. It's become a lot more bullish. We actually called out for a long on this thing above, I think, 204 or 205 because of a character change with the news, and that trade worked out pretty well. But back over to Tesla, ever since that false breakout has occurred, this thing just hasn't been trading right. And we've seen a couple instances. I think that on July 1st was also a gap down on Elon going crazy on Twitter or whatever, but that got bought up. And I reshorted that bounce back. And now we're down here again. I don't know if the market's going to buy this back up in the short run because things get stale. You know, the first time we saw Trump and Elon get into a fight, it destroyed the stock, and it was all intraday, and it was one of the worst down moves that Tesla's ever had. They killed this thing from like 330 all the way down to 273 or something like that, all in one day on a brutal amount of volume. And the next time they got into a fight, it happened to be an overnight move, and it wasn't as dramatic, and then they bounced it back. And now the third time they're having a fight, it seems like this fight escalated a little bit more because he's starting a whole new political party. But it's still not as dramatic of a move as it was even on that first time. So sometimes news gets a little bit stale, but how does it impact the fundamentals, which I think does matter at a certain point, is it can't be impacting them positively. One is the big, beautiful bill just negatively impacts their business regardless of anything else. But two is losing that favorability with Trump will also, I don't know if it negatively impacts the business, but at a minimum, and this is what matters the most, it negatively impacts the perception of the business. And when you're talking about a company that trades at the valuation that Tesla trades at, perception is everything. So that's where we're at with that one.
All right, good. All right, somebody asked will Tesla go up tomorrow after today's dip? But I mean, you talked about it. You mentioned that. Okay, when we...
I said it might. It could bounce back on that. That's why I'm out of my short. I hope it bounces back because I want to reshort or bounce back. So we'll see.
You've been I'd say you've been a Tesla bear for a while. You don't like the company at all. Tesla for so long has, been like, it's a propped up by Elon Musk and who Elon Musk is, and he is the brand and he's the mind and the genius and blah blah blah. Do you think at this point he's kind of ruining that positive effect that he typically has on the stock?
Yeah, I mean, look, politics is bad business. I do my very best. I of course have my political opinions. I do my very best to not really talk about them in any business sense as much as possible. And it's hard sometimes being a trader because of the interconnection of federal government policy and the impact on the stock market. But people might be surprised overall actually at my political beliefs. I remember there was a period of time here where a lot of people were posting in like the YouTube about how much of a liberal I am because I don't like tariffs. And really, I would argue that you're a liberal if you do like tariffs because traditionally they're a liberal policy. But it's just bad business. And that's been one of my biggest bear cases about Tesla. Tesla's one of my best names of the year this year, and it's entirely on the short side. Might even be my best name of the year. And I mean, just look at what he's doing. If you are a left-wing, whatever type of person, those are the people that traditionally want to buy electric vehicles. And you are probably still interested in buying an electric vehicle, but you're not buying one from Elon Musk anymore. And if you're on the right, honestly, you probably weren't buying an electric vehicle anyway, but now you're certainly not buying one because of what has occurred. What I've seen on social media is just a lot of right-wing hate towards Elon now over the course of the last week or two. So I don't know who's going to be buying his products. I was just in Paris 2 weeks ago. I got picked up by a Chinese electric vehicle, and I had a whole conversation with the driver about the vehicle because I was genuinely curious. I was asking him about, would you buy a Tesla? The car he picked me up in, I forget the name of it. It was not a BYD. It was a different Chinese electric vehicle. And he was like, I have this car and it's great, but it's not as good as the BYD. The BYD is phenomenal. It's so cheap. It's better than a Tesla, but it's cheaper. It's better than a Tesla. It's better than the one I'm currently driving. It's also significantly cheaper than a Tesla. I don't know who in Europe is going to be buying a Chinese car, going to be buying a Tesla when you could buy a Chinese electric vehicle. And in the United States, because we no longer value free trade or free capitalism in the United States, we no longer value competition in the United States, in my opinion, we're not letting the Chinese cars in. We're putting huge tariffs on them so that they can't properly compete. So I haven't seen a single Chinese vehicle on the road. I remember telling that to my French Uber driver, and he was so surprised. He was like, "Oh, really? What do you mean?" I was like, "Yeah, it's the first time I've been in a Chinese vehicle, and this is the first time I've honestly ever even seen any of these BYDs driving around or anything like that." So they can't compete in Europe. They can't compete in China. They alienate everybody in the United States. It trades on an obscene multiple based on a hope and a whim that they become the leader in robotics when there's no guarantee that they're going to be the leader in robotics or the leader in robotaxis when they're behind in robotaxis. And by the way, on the robotic side, their head of Optimus quit. So I just I don't get it. So I'm a huge bear on it, but I also respect the technicals. Back in, if you want to just pull the chart up one more quick time, back in April, I called out a long for Tesla, and it was just a technical setup. The stock had come from 490 down to 220, was bouncing back. The chart was improving. And after the earnings report, we noticed, you asked me about this before, that the stock had a bad earnings report, but it traded well on it. That's a big signal. And then you had this 460 breakout. 260 breakout. That 260 breakout was a phenomenal buy opportunity. We called that trade out here for the team. And I think we called out another long on the breakthrough 295. Those are technical trades. So I could sit here and talk to you about how I could talk to you till I'm blue in the face about how Tesla's valuation makes no sense, that this company belongs at $50. And honestly, that's what I think. But if the setup is to the long side, take the trade to the long side and make money. Make money. Don't be stubborn with your thought process and let it overwhelm what you actually do in the market, because there will be plenty of times, if you do this long enough, where you will disagree with a market's move. What matters isn't whether you disagree or agree and it works or doesn't work. What matters is the money that you made or lost. So if there's a technical buy set up in Tesla and you're bearish on the stock, buy it or don't do anything. Don't short it at that point. And if you are a real hater in the stock, then the bear setup will present itself eventually. And it's the difference between you were short from 260 and getting blown out by 360 because you're blowing up your entire account on the short side because it was super bullish, versus I hate this company. I think it belongs lower, but the chart's higher, so I'm not going to do anything, or maybe I'll even buy it. And then when that technical setup comes in, that break of support comes in, that failed breakout comes in, then I'll actually put my money where my mouth is when the setup is there and make money from it. That's what we need to do. So I love talking about the fundamentals and my thought process for an individual company or for the market as a whole. I'm genuinely fascinated by it. I love markets. This is what I love to do. These conversations I love to have. But don't make the mistake of letting your thesis override the technicals when the technicals aren't confirming the thesis. That's the real key to success in this business.
All right. I got a question about T3 trading. And so you are the person to answer questions about T3 trading. Joe says he's been trading for 12 years and asked, can I trade futures on options and options trades if I join T3? So.
Yes. T3 has equities, options, futures, and options on futures. So all of that is a possibility. You want to reach out to, you can just reach out to myself directly and I could set up a conversation with you. Oldensmith at t3trading.com, or you can email info@t3trading.com, and I'll get back to you with some information on how it all works. But we've got equities, options, futures, options on futures. For futures traders, we've got seats on the CME and NYMEX, so qualified futures traders can potentially access those membership benefits. There's a lot of advantages, in my opinion, of trading prop through T3 versus going it on your own in a retail account, and that's why I've been trading prop at T3 for 15 years.
Mm-hmm. All right. I put your email, or I put Derrick's email, Joe, in the chat, so you can see that as well. I see he's still here. He said, awesome. Thanks, Derrick. If you work with T3 Trading, you work directly with Derrick and his team on a daily basis. So all the analysis and ideas and all of that you get here for free on YouTube, you get all of that every single day, all day trading from Derrick with him in the room. So it's good stuff. All right, Derrick, I want to at like an overall view from you on the market. And I know, when it comes to you and you're coming up with ideas, you start index level market first and then narrow down to specific ideas. So after June, what was a pretty strong June, really good June, we were grinding a little bit higher, and then we had a really big end of the month. So it was a good June. Now we're here in July, which is typically a really, really strong month for the market. July and August are usually great months for the market. What are you looking at market wide here, and then narrow it down to some ideas that you might like, and would love to look at the charts.
Sure. So pulling up the charts here, we've just had an incredible move since the breakout that happened at the end of June. Just an incredible move. Like you said, June was a little bit of a slower first part of the month outside of anything AI or semiconductor related. AI and semis were just pushing and pushing and pushing, and I guess they were offsetting weakness in other areas that was enabling this market to be sideways and primarily grind up. And then we had this technical breakout, which the team and I, we called this. I know my partner Pat was all over this call out. The technical breakout in the SPYs and the Qs here on June 24th. And the market's strength since that breakout has been nothing short of incredible. 1, 2, 3, 4, 5, 6, 7, 8 positive days in a row since the breakout. The SPYs have not touched the 8 EMA on the daily chart in 9 trading sessions. The short-term tactical sentiment indicator, which is something I really like to look at, is like breaking the record right now for the amount of extreme short-term overbought days in a row that I've ever seen since I've been monitoring it. So we've been just up and up to the right, and July, especially the first 2 weeks of July, has so much strength from a seasonality perspective. When you have a positive first half of the year, so much new money comes into the market in the beginning of July, just marking that like 6-month part. So just incredible strength. And we have a wild systematic bid from the vol control universe because April's volatility on the 3-month look back is rolling off. Today alone, I think vol control was expected to buy $10 billion worth of SPX. And over the course of this month, they're expected to buy something like $100 billion worth of SPX or something. So it's just an insane amount of forced buying that's ongoing here in July. With that said, we got stretched, and the market really does, in a lot of ways, work like a rubber band. You get these periods of time where the market stretches, it extends, it stretches away from that equilibrium zone that I define as a space between the 8 and 21 EMA, and then it has to correct. It has to snap back a little bit. And corrections can occur through time and through price. So if anything, the incredible thing is like we are due for today to have a red day. We are so due to have a red day in this market, to have some price correction, to have some sideways action. The incredible thing is that we're doing it in the face of one of the biggest vol control bid days I've ever seen in the time that I've been following markets. There's a huge amount of buying that's being forced into the market today. It just makes you wonder how much we would actually be down based off of some of this tariff-related headlines if the market dynamics were different. But what matters more than anything is market dynamics. We saw that in June. We saw that with the Israel-Iran situation. And if this was 15 years ago and the Israel-Iran situation was occurring, you would have gotten a 10% pullback on the market. I'm pretty confident about it. Here we went back. We didn't even have a down 2% day. We haven't had a down 2% day since April. but it was a time where the market couldn't go down because of a huge gamma bid on the downside. You had $15 billion worth of buying that was coming from options market makers into a 1% down move in the S&P, combined with a continuation of the systematic bid, combined with corporate buybacks, all ongoing at once. The market could not go down. And we're kind of in a similar structure right now where it's very hard for this market to actually go down, but we're having a red day today, I think, just because of how stretched we are. Where we've been for a handful of trading sessions in a row is one of my least favorite places to be. It's a place where you have a bad risk reward to buy and you have a bad risk reward to short. You have a bad risk reward to buy because we haven't gotten a setup. The setup was here. The setup was here on June 24th. There were so many things to buy that day too. You could have bought the SPYs, you could have bought the Qs, you could have bought NVIDIA, you could have bought Meta, you could have bought Palantir. There were so many names you could have bought on that day that worked phenomenally well. And this, by the way, is one of the things I love about swing trading. One of the things I love about swing trading is that you do 1 day's worth of good work and you can get paid for it for 8 days. That's what happened here. If you did a good job on June 24th buying the breakouts that we were looking at, that my team and I were calling for, you got paid for 8 days in a row. You might even still get paid more. This might just be a little hiccup pullback that leads to new highs. It very well could be. The trend is super strong to the upside. And again, there's still a huge underlying bid to this market. That's what I love about swing trading. But now where we are here today in these last several trading sessions, it's really difficult. We're not really extended enough. I mean, we actually started to get there a little bit on Thursday. But we haven't really been extended enough to short. Maybe, again, Thursday was the one time. But it was a half day, if you took the day off, you didn't get those shorts on, and then we gapped down this morning, and it's hard to chase a gap down. So this morning, hard to chase a gap down. We're less extended because we were gapping down. It's kind of hard to do anything. But the new longs, there's no setup for it. So it goes back to what I was saying earlier, but in a different way about buying day twos. Why don't I like to buy or short a day two? It's just not a good risk reward and probability of success. If you're buying the gap down this morning, there's no setup for it. Where are you going to give it to? You're going to give it all the way down to this low maybe from a few trading sessions ago. It's not a great risk reward to put that on here. Wait for the better setup to come in. So we need this market to play out. I do think that we are going to have a return to volatility and have a really big down move at some point in this market. The question is the timing of that big down move. And the market structure says it's not yet. So, I think July OPEX is a window of opportunity for the market to weaken out. I think it's more like an August or even September situation at this point. We'll take it as it comes. So for now, I think that this is just a technical pullback from oversold conditions that is potentially viable. So I've been kind of going through like a list of stocks that we want to pay attention to on pullbacks. I think I said this morning in the morning meeting, like I'm not really interested in Meta here at 720. But if Meta were to pull back to like 700 to 705, that would be an area that I would look at it in conjunction with the market because we're still going to be strong here for July. Amazon, I don't want to chase 225 in Amazon right now. But if the market pulls back, if this thing retests 220, maybe in the short run, that's a spot I could pay attention to. 215 would be an even bigger and better level. Apple changed and got better again. But Apple 205, 208, something like that. Give me a market pullback to create the market setup in conjunction with a good, healthy pullback in Apple. That's a spot that I could potentially buy. But we're not there. We're at 211. So I don't want to buy this here, but I missed the short. Yeah, I had to have the short on Thursday. So that's just kind of where we're at. I'm being patient. I generally like shorter to intermediate time frame longs on a pullback setup. And then bigger picture, I do want to see if that gives way at a certain point. Maybe it's in the second half of July, more likely August or September, to actually a deeper pullback. And that's what I still think is going to happen when we eventually see the repercussion of these tariffs in the economy.
Yes, and just a reminder for everyone that the tariff deadline has been extended. It was supposed to be this Thursday the 9th? Yeah, Thursday's the 9th. But now it's August 1st. So the market gets more time to mull over whether they care about tariffs or not. All right, I'm going to let Derrick go. Derrick is a real trader, so I want to let him get back to that. You can go to t3live.com/DO live if you'd like to get his free ebook. Joe, hope you can get in contact with Derrick by your interest in T3 Trading Group. For everyone else who might be interested in working with Derrick, this ebook teaches you all the benefits of prop trading with T3 and working with Derrick himself. So again, that's t3live.com/DO live. Derrick, have a great rest of your day and your week. It's only Monday. 4 more trading days to go. So lots of things can happen over the next week. We'll talk next Monday. All right.
Thanks, Greta. Talk to you soon.
Okay.